markets rallied despite Fed tough talk, with PCE coming in lower. What's up, guys? It's Brandon from Amphibian Trading. Make sure you hit that like and subscribe button so you don't miss any future updates. And now that that's out of the way, let's get right into it. We're going to start by taking a look at the indexes, and then we'll jump over to my current holdings and my plans for them. So first up, we have the QQQ, which has been in this power trend since February, and this has just been moving higher steadily, holding all its moving averages. We had this test of the 10-week and the 50-day here, but pretty much since right here, May 4th, we have not even tested the 21-day exponential. So this is just showing tremendous strength. I don't like that we did have 4 distribution days just clustered right here. However, price is moving back up again. We now have this unfilled gap after we got the PCE numbers today on Friday. Next week, it's going to be a short week. Trading volume is likely to be light as we have the 4th of July holiday, so it wouldn't surprise me to see the market come down and maybe fill this gap and just kind of meander around next week. Now, if we take a look at the SPY, the SPY, pretty same story. We're in this power trend. We had a couple distribution days come back, not quite to that 21 EMA, but now we have this gap up again on Friday. Our maximum exposure count here, just like the QQQ, according to the Market Navigator, is an exposure count of 7, which warrants 100% investment if you are being selective and making progress in your holdings. If we go over now and take a look at the small caps, similar story. It's more recent, but we now are in a power trend. We have our same exposure level. Our exposure count here is a 5, which is technically the maximum if you are not in a power trend, but since we're in a power trend, this could go up to 7. So small caps starting to participate in the rally. If we go over now and take a look at the QQQE, which is the QQQ equal weight, again, just what we want to see. We're in a power trend. Our exposure level and our exposure count are right at the highs, and we only have 1 distribution day here. So just we want to see nice support at the 21-day exponential moving average. We had some tight closes here as well this week before we pushed higher on Friday with the PCE. Lastly, let's take a look at the QQQJ, which is the second 100 largest companies of the NASDAQ. And this, again, is starting to participate as well. We have a power trend, exposure count, and exposure levels there, all at the maximums with our distribution days only at 2. Now, besides looking at all the indexes and seeing what the Market Navigator is showing us and just the general price action, how we're starting to make higher highs and higher lows, another way that we can tell that participation is starting to broaden is with our net highs and net lows. You can see here we had this nice period of net highs as we pushed higher, and now as we had this pullback, we did go into net lows just briefly, but if you look at this, the numbers are very small there, and I think that was more just not many stocks making new highs versus stocks breaking down. So we quickly got back into net highs this week, which is exactly what you want to see. If we jump over and look at some of our secondary indicators, you can see our put to call ratio is neutral. The VIX has just been coming down and we're staying down, which is exactly what the bulls want to see. And then we also have our percentage of stocks above the 50-day and the percentage of the stocks above the 200-day rising at a pretty nice angle this week. So all of that leads me to be bullish. And now let's go ahead and look at what I am holding and what my plans are with those holdings. Okay, so let's go through my current holdings and what I'm watching. I've been buying pretty aggressively as the Market Navigator exposure count's been rising. We've seen breadth start to expand with net highs as well as the percentage of stocks above their 50-day and 200-day moving averages rising. So first up, let's take a look at Celsius. This one has been grinding higher ever since coming out of this nice long base from its earnings gap. This week it closed just pretty much unchanged, down a fraction, which is slightly disappointing on a week when the QQQ was up almost 2%. However, if you look at last week, the Qs were down and Celsius was up just about 4% on increasing volume. So it's also gone up since this earnings low, close to 50%. So a little sideways here, maybe another tight weekly close. putting in a 3 weeks tight would be something positive to see, especially next week. It's a shortened week from the holiday, so trading volume will probably be light. So I don't expect anything crazy to happen there. If we look at the daily chart, you can see it's just been grinding higher. We kind of had this upper trend line that it overshot a little bit, but it seems to constantly just be bumping its head against. So we'll see if we can put in some tight action again here, maybe setting up a low risk spot to add some additional shares. You also have all of these pocket pivots you see down here with the black diamonds. So really good action out of Celsius. This one could definitely be a leading stock. Next up, let's go ahead and look at HubSpot. This one hit a new 52-week high this week. We also have the relative strength line moving into a new 52-week high. So we have this consolidation area here with 4 weeks tight. You can see we have 2 of these circles. Each one signifies 3 weeks tight. So we have 4 weeks tight there, which is just short of a flat base. We needed 5 weeks to complete that. So since we got above this high here of 535.12 this week, we just overshot it barely, 535.90. So technically we don't have a flat base. However, action here has been good. Tight weekly closes as this just went sideways, allowing this 10-week moving average to catch up, which is exactly what you want to see from a leading stock. Looking at the daily chart, we had the earnings gap, grinded higher, and then now here's that tight consolidation, which also put in this pennant. So really nice action here. Volume increased here on Friday as we pushed above that high. Exactly what you want to see. From there, we have Samsara IoT. This one is a nice young IPO. I'm looking at this one as a high tight flag. We went up 69. Let's go down here. Yeah, 85% in 5 bars. And we've only corrected, I believe, 20%. Let's see if I go from the top to the bottom. Yeah, 20%. So that does meet the criteria for a high tight flag. You also have very nice volume on the way up. Again, some increasing volume on this previous leg up. And it's not surprising that we stalled right here where we did, which is just below the all-time high from back here when it IPO'd. So if this can come up, get close to that all-time high again, maybe go sideways from there and add a couple tight closes, setting up a very nice pivot, that could work. Here is the daily chart. Here's that high tight flag. We have this downtrend line pushed above it. And now I think we just need some more consolidation here to allow some momentum to build and before we take out this high. Next up is MongoDB. This one is another high tight flag, and this one actually broke out from the high tight flag this week. You can see we had 3 weeks tight as well forming in the flag. We have the relative strength line going into new 52-week highs and very nice volume here. We had this one big spike on the red, which was an ugly week. I don't know if that was news related or earnings related, but since then, look at how many blue bars we have, a lot of them above average volume. Now we have this high tight flag that it broke out of. Looking at the daily chart, same thing. Here we go, high tight flag. We had this nice trend line. We also had a mini coil, and look at all these pocket pivots again with these black diamonds down there. Exactly what you want to see. Don't really like the stall here. However, on Thursday and Friday, it did recover nicely, closing above the high tight flag pivot. From there, we have PCOR Technologies. This one is forming this cup and handle base. Very nice structure to the base. You can see volume drying up in the handle area. Nice close near the highs on this week. If we look at it on the daily chart, here's that same cup. There's your handle. This one's not doing anything wrong, but it does seem to be lagging compared to some of those other ones if they've already broken out and have started their moves while this one is still in its base. Let's go ahead now and look at Supermicrocomputer, SMCI. This one grinded higher pretty much throughout this whole chop period here in bear market in 2022, just putting in base after base after base, steadily grinding higher. And now, on the back of its latest earnings report and NVIDIA's earnings report, this thing has taken off like a bat out of hell. It's gone up 190% in 6 weeks. So that is some serious strength. And look at the volume as that made that move. If you go back, pretty much throughout the stock's history, volume has always been much lower than that, and now it's just very much ramping up, showing you that that is institutions buying. It's not just retail traders doing that. So we have this 190% run up, and we've only pulled back 20%. So this looks like a very nice high tight flag. If we go into the daily chart, we have this trend line that it broke above. I actually started buying here on this kicker, which I'll put a link in the description to an indicator I created that identifies kickers for you. That's where I got long. I'd like to add more to this, so hopefully we can consolidate here, maybe put in a mini coil or form another trend line and allow for a nice low risk entry to keep adding shares. Lastly, we have Tesla. So this one formed this nice double bottom base. It broke out, and now it's 5 weeks into William O'Neill's 8-week hold rule, which I'm using for this because it went up more than 20% in less than 3 weeks after breaking out. And you don't want to use that rule on any stock, but this one has been so strong. The volume signature is there. If you look at the daily chart, it went up, I think it was 13 or 14 days in a row here. All those pocket pivots, a lot of strength there. We have an unfilled gap to the downside, so there's a lot to like here. Again, here's that same double bottom base. If we go back to the daily chart, you can see back to the weekly chart, you can see we have pretty tight closes right in this range, which is ideal. Means institutions are controlling the stock. They're holding it in that place. That's going to allow the moving averages to catch up, hopefully set up some nice tight pivots and allow us to add more to this position. So that's what I'm holding now. And at this point, it's all about trying to increase my exposure into these leading stocks while not raising my average cost too high. So I want to be able to sit through normal volatility and pullbacks. So the way we do that, we can trim some of our stocks that aren't showing that leadership potential to lock in those gains. That way we are able to sit there and not worry about our P&L fluctuating, because we know that we have potential leading stocks and we've been locking in gains along the way in other stocks that might not be the true leaders, but also offer us good gains. Thank you for watching. If you enjoyed this video or found any of the information useful, please go ahead and hit that like and subscribe button so you don't miss any future updates.